Hey, good morning, currency traders. It's Friday. That means it's swing trading day. But first, we got to do our webinar. We have to do technical analysis, fundamental analysis. Since we're Forex traders, I suggest we take a look at euro dollar and pound dollar and euro yen and pound yen and euro Swissy and pound Swissy. I don't know, maybe some dollar pairs, gold and oil and all that kind of stuff. And hey, if you're from Johannesburg, yeah, got my Wanderers Club shirt on today. So that's nothing but good luck, right? Nothing but good luck. So let's go! So that's right, Joe Berg. Wanderers Club in the house. Got the black and red on. So anyways, that's for you. Hi, my name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. What does that mean? I love trading currencies. I've been doing it for a very, very long time. And in fact, I'm here to help you trade. I want you to have the skills that you need to find success. And it's not just technical and fundamental analysis. I mean, that's easy. You can just learn that. What's the big deal? But patience and discipline requires rewiring your brain. But why would your broker want you to be patient and disciplined? Because to a broker, the best client in the world is a happy one. And how do you make a happy client? Hey, world-class customer service, fast execution speed, awesome swaps, low spreads, all that's good. But the happiest client is one that's successful and profitable. And they keep trading day after day, week after week, month after month, year after year. And so there's a huge symbiotic relationship between a world-class broker and a world-class trader. They need each other. So anyways, that's what I'm here to develop. So if you don't mind, I would like you to be a huge success. And you will pay it back, hopefully, if your mama raised you right, you will pay it back by opening an account at TradersWay.com. You can start today. When you're in your back office, download MT4, come back to this chart, and it may be the last day, but you can download all my chart templates for free right there, just in the description below. Okay, so anyways, today's host is Forex.Today. Please subscribe. When you do that, and I click stream, YouTube is supposed to send you a notification. You have to have that little bell thing on, but go ahead and do that. Now, some people don't get those alerts on a regular basis or consistent basis. Sometimes they get them, sometimes they don't. So if you have one of those YouTube issues, you can also go to twitter.com/FXBootcamp, and you will get a tweet when I start my webinar. So one way or the other, we're here for you. Let's make it easy. So gold, oil, all that kind of stuff, great. Get them late? Yeah. In that case, use the Twitter feed, Oswald. How many ways? There's tons, Oswald. So like, I'll never forget when I was at a private hedge fund manager event in New York City. I remember thinking while I'm sitting there, I'm looking around, there's, I don't know, a couple hundred people. I thought, you know what? Everyone here does something different, but they're all successful. So it's cool. Cool. So it doesn't really matter what you do, but you have to be good at what you do. Anyways. So let's move on.com. And by the way, I haven't said it yet today because we've only been going for 4 minutes and 17 seconds, but oh my God, my monitor's awesome. I get to see. I sit down, it's like, this is silly. Right? It's so big and so clear. It's silly. I'm like, I must have this set wrong. All these things are, and then I look, no, it's set right. It's just, wow, it's so clear. I'm so happy. Cool. Zadi says, hey, I'm not successful. I keep trading every day. But that's part of, the tenacity is part of what entrepreneurs have, right? And I believe we're all entrepreneurs. So we have that. We have that tenacity. If you didn't have that, I'm not sure if you'd be successful. I mean, you have to have that. If you lack the tenacity, the first time you run into a rough patch, I don't know if you've been through it yet, but a period of horrible, horrible, horrible darkness and despair and pain and suffering and anguish. But when you get there, you either fold like a wet paper bag in a monsoon, or you stand up and you fight. But you might go through the dark period. It can last days and weeks, but you'll survive and you'll get through it and you'll be stronger because of it. Okay. Yeah, Chuck, yesterday. So we're about 90% done the unboxing video. So I'm going to share it with you guys just because, I don't know, it's fun. And you guys are traders, so everyone's interested in the computer setup. But it looks like, let's see, display settings. So that's what it looks like now. So the one up here obviously is one screen, but it's, it's got double the resolution of the first one. But the thing is, this one here is 18 inches and this was 49, so it's actually bigger than that, right? That's just resolution, but it's actually bigger. So it's almost like from here to here. So the monitor is that wide. See, right? It's that wide. So anyways, it's pretty awesome. I'm super happy with it. So anyways, I did a little unboxing for you guys. So I'll put it up somewhere sometime soon. Hurricane is coming. That's correct. And I will be hosting hurricane refugees in my home. So I did that a couple of years ago. And this one's coming and likely to, almost for sure, going to hit Florida again. So I will be hosting another family and their pets. Yes, and their pets, with a plural. But my guest bedroom is larger than most people's apartments. So it has a semi-private living room. It has a full kitchen, full stove, full fridge. And it, of course, it's got a nice bedroom area with views out two sides of the window, so you can see lake over here and see lake over there. And then it's got the jacuzzi tub and there's stand-up glass shower area and two sinks and a walk-in closet. So anyways, and a big walk-in closet. The walk-in closet in the guest bedroom is big enough where it has its own window. So anyways, I have an opportunity to help. And that's my small way of doing that because we don't use the guest bedroom that much. But the light is fantastic and there's more than enough room. So they'll have, it's basically an apartment, right? So anyways, so the hurricane is coming and so soon will the refugees. I think, all right, but anyways. So let's take a look at this. What do you think about that? Oops, that's not my drawing tool. Drawing tool. Where'd you go, drawing tool? Now, I want you to take a look and ask yourself if that monthly pivot, that monthly S2, is technically important. And remind yourself, maybe it's psychologically important, or maybe people have it programmed in their algorithm. Okay? Why isn't it not booting? Maybe it's somewhere else. Oh, it's way over here, no wonder. So someone asked, will the hurricane affect Forex? Well, here's the thing I've been teaching for a bajillion years. I think I was teaching people this, I don't know, 10 or 12 years ago. There used to be an image of me somewhere with my computers behind me. It was back when I had 18 22-inch screens. And in one of them, you can actually see, like it had nothing. I was just in I think I was doing a Forex television interview or something. But anyway, so behind me, you can actually see live hurricane feed data coming in behind me. And I used to use the NOAA website all the time. And so, anyways, I would track hurricanes coming off Africa. And I'd look at the trajectory that it was taking. And from that, I could guess if it was a big enough storm and if it was coming up high or low, because it's going to run into the Caribbean and go one way or the other. It's either going to come up high or it's going to go into the Gulf. And based on that, I could either buy crude oil or I would buy frozen concentrated orange juice, depending on the trajectory it was coming off of Africa. And the idea, though, is I would buy it, let's say, a week before CNN got out onto the beach and said, "This is a cover. It's so big, it's so windy. You can barely hear me, but all the waves. It's gonna be a disaster." Right? If you bought a week before CNN started covering it, you probably would make money. So that's what I did all the time. So will Forex be affected by the hurricane? No, but crude oil and frozen concentrated orange juice would be two things that I would look at. And in this case, so let's narrow it. In this case, we're not in the Gulf where it's going to hit Florida. So in that case, you're probably, I mean, I'm not looking at frozen concentrated orange juice futures right now, but you're probably 10 to 14 days late. So if you know about the hurricane, you're already late. So the idea is you need to know before the hedge fund managers and before CNN and before brokers start calling rich dentists and chiropractors and engineers and say, "Hey, dude, did you hear about the big hurricane? We need to trade. Let's get in a trade. Let's get in front of this thing." But by the time those phone calls are being made where brokers are selling trade ideas to their clients, right, then it's over. I mean, in one morning it's over because everyone's pitching the same nonsense. So if you're in a week before that because you're smarter and you're actually doing the data and you're actually tracking these things, then you know when to buy and you know what to buy. Does that make sense, guys? Heath, you're in Vero Beach? That's nice, right? What is that, Jacksonville? That's closer to, isn't that pretty close to Sawgrass? Yeah, turn the caps off, dude. Oh, it's not Heath? I must be thinking of a different one. Sorry, Heath. All right, so anyways, here's what I wanted to do with the drawing tool. Okay, if you think these are just random coincidences, that the weekly M4 is the top and the monthly S2 is the bottom, right? If it's not, you should really write it down. Leave a note for yourself. Dear me, I really have learned the power of pivot points and I want to pay more attention to them. So on a daily basis, I want to look at what those key pivot levels are. Oh, down there? Okay. Yeah, so you're right in the eye of the storm, Heath. Well, good luck. I hope you have somewhere to go. Okay. Even Kiwi. Right? Didn't we talk about this? Not this week, but last week, didn't we? When we were up here, we were talking about triple bottom off of the M2. So it hasn't happened again, but you could have put a trade plan together in the last 24 hours, right? and you could probably still do one in the next 24 hours if you're a bull. Now, remember, you have to be a bull. This, like this double bottom at the price we wanted a week ago, that shouldn't make you bullish. You have to understand that. If this chart makes you bullish or bearish, you're not in control of your trading. Someone else is in control of your trading. Okay? Adam says next month setting up nicely. Yeah, but that's why I told you guys all about it. Spent what an hour a day talking about the fact that I'm already trading September, and we were in here, right? Right. I think it was the 14th or the 15th of the month, and I'm like, all right, I'm done with August. I'm trading September, right? David, actually, there's still a coupon code that's active for summer school. So my first day of fall school, if you want to call that, is Monday or Tuesday. But the special that I sent out back in June, I guess it was, that did expire. But then I got a really heartfelt email, I don't know, 2 weeks ago or something, to please extend it, please, please. And so I extended the coupon code to September 1st, I think. I haven't told anybody. I did it for that one person. But if you have that original email, David, with the coupon code, and it's a massive discount too. It's like $1,000 discount or something. If you have that, plug it in and it should work. Oh, well, then that's a good place to start, but that won't cover fundamentals. Okay. So you'll get like training on technical analysis, training on fundamental analysis, training on MT4, training on swing trading. There's another taking control course in there. I think it's 35 hours of training now in that. So anyways, enough that. So figure it out. So anyways, planning ahead is what I'm trying to teach you guys. Okay, planning ahead. Beast, even Beast hasn't done much, right? So I still would like it to drop down a little bit and buy it since I'm already a bull, right? Now the interesting thing is it just might not do it. So it's funny, like I as a bull want it to retrace. Most people don't get that for quite some time in their career. But as a bull, I want to see red. I don't want to see green. Because I know the fundamentals are behind me, or at least I assume the fundamentals are behind me, right? See what I mean? Yeah, Sky Killer, that seems about right. Okay, so I want it to do this, but it could just kind of do this. All right. Tom, thank you, Tom. But realize it's not fundamentals, it's news. There is a difference. But thank you. Yeah, in fact, I'll bring that up now. Hang on. Tommy George. Account is expired? What? I'll have to contact them. That's interesting. My site license is expired. What do they charge now? I actually don't know what the regular people pay. Pro Equity Audio, $350 a month. Premium, so I wouldn't need that. Standard Equity membership. Oh, look at that. So it's only $85 a month. Well, 185. Yeah. Pro Macro. Yeah. Oh, gee whiz. That's so much cheaper than 10 years ago. So like 10 years ago, you couldn't even just click a button and buy a membership to Trade the News. 10 years ago, you had to prove that you were an institutional investor. So that's interesting. This isn't an ad, by the way. I honestly don't know what regular people pay. I have a site license, and I've been working with Trade the News since they were a tiny startup. I've worked with them, yeah, probably 13 or 14 years. Interesting. So you couldn't even sign up. So there was a time when if a boot camper wanted to sign up, they would have to say, hey, I'm with FX Bootcamp. And then they would charge you, and it would be a lot more than that. So anyways, I can't get in. So I'll have to email them and have it open. So I won't have that. I do have the speakers working, yeah, which is good. And then I hooked it up. I don't know. It's funny. I should probably do a full detailed overview of my trading setup. But one of the most important pieces of equipment is this one. You guys have one of these? Look at this. Subwoofer, and it's water resistant, sand resistant. You could take this to the beach. It's got 2 subwoofers. This is probably better than the stereo in your car. Not bad for Bluetooth. So anyways, I have it up there, and I connect it to the laptop, and so when I'm playing music, it's just bumping. Yeah. So Oswald wants to bash my trading partners I've been working with for 14 years and go against the sponsor of our website. That's not cool, Oswald. Starting to bug me. All right. Let's see. Boom. Okay, let's go into here. So this is that one we've now been tracking for a couple of weeks. And remember the idea, here's the short sell drop. Then we have this as an estimated level of resistance for re-entry. So then it does this, which was the plan. And now we're in this scenario where we're hoping right around this price. Oops. You see this? Right around this price, we're expecting a fall. Oh, sorry. I got to turn this off with, hang on. Okay, let's put it back. Okay, so 2 weeks ago, there was our drop zone. Actually, that was our swing trading. That was Friday. That was our swing trade short, and there was our target. So beautiful swing trade. Then we expected a retracement back off this channel line. That's why the channel line is there. And then around this price level, we expected if it was going to drop, it would have to drop off that price. And if it does, it may actually fall for the next 6 to 8 weeks. Okay. Does that make sense? Colin says, hey man, when people say you can make 30% a month, is it realistic or BS? No, you can do it, but it is BS. It's a sales pitch. It's not a lie. Like, you can do it, but it's not what you want to do. What you want to do is develop skills and trade for many, 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 many years and slowly build your trading account with as little risk as possible. So Colin, put it this way. If you do the calculus, right, profit is a function of risk. So if you make a huge profit in a month, you took a huge amount of risk, and that will destroy you, and no one will ever invest in you. And if you're taking that kind of risk, it's probably because you don't have any money. So if you ever plan on having money, you need to learn how to do it properly and not gamble. So profit is a function of risk. What you need to add instead of more leverage is more time, because you can I can show you in a spreadsheet, and of course it's in my book, I think, where I show you where if you just take a small amount of money and trade properly, small and small and small and small and small and small and small, right? Small, but it grows slowly. And instead of adding leverage so you make more money, you add time. So instead of doubling your leverage, you say 5 years. And what'll happen, and of course, if you take my advice too, as your account grows, your lot size relative to your account size actually gets smaller. So I'm recommending, Colin, that you learn how to trade properly and then slowly grow your trading account. And as it's slowly growing, you're slowly reducing your risk per trade relative to your account size. So after 5 to 10 years, you are quote unquote rich versus a few months. Like, think of it. What the stock market is not up 30% for the years. So why would you be up 30% for the month? So if you showed that to a professional investor, they look at the beta, which is the market, and they look at your performance, and you're like, you're doing 30% a month, and the stock market's up 12% for the year. There's no way. There's no way you're going to get an investor. Just none. And so someone that's not experienced will say, well, what do you mean? Wouldn't they just be amazed at 30% a month? No, because they see risk. See, rich people are already rich, so you can't think poverty. If you have poverty thoughts and you walk in a room with a bunch of rich people, it's like having a plague. You know what I mean? Like, you got boils all over your face, the boils of poverty. And you go in to sit with a rich person, and you're like, I can make you a lot of money really quick. We're going to get so rich. We're going to do it. They're just like, oh my God, what the hell is this person doing in the room with me, right? It's just dead. So you got to think at a whole different level. People don't want risk. If you have nothing to lose, then you'll take the risk. But people that are rich have tons to lose. They don't want risk. Okay? So here's how you raise money, right? Someone that you know has a 100-foot yacht. And they're thinking about getting a 120-foot yacht. But you convince them they should give you the money instead. Okay? That's it. And just say, all right, your yacht is only 100 foot. I understand. But if you give me time, I will trade with your money. And this will allow us to develop an income stream from the cash that's greater than you'll get in the stock market, in the bond market, or your bank account. But the thing is, we can pay for your existing boat. What if your silly little 100-foot yacht can be paid for by the income I produce through investing in the currency? So in essence, you can spend a lot of money, spend double what you spent on your 100-foot yacht to get a 120-foot yacht, but then your neighbor's going to get a 140-foot, and then now you're going to be out again. Or you can brag about how your yacht's free. Boom. Hey, by the way, here's the trade we talked about 2 weeks ago. I know, right? So anyways. See, rich people don't have cash. I don't know, right? I don't know if you guys are taught any of this. I know it's not taught in schools, right? Rich people don't have cash. Let me move to a smaller time frame. Rich people don't have cash. So they would like income. Okay. Chuck says, I'm in that one for the month. Yeah, well, that's what I set up yesterday, the day before that, and on last Friday, right? It's the same swing trade. So last Friday's swing trade on this was down here and down to there. But you notice that 2 weeks ago, so when we were way back here, I'm already talking September. So in this case, this is still the September trade. Yeah, Chuck listens. It's amazing, eh, Chuck? What would your 6th grade teacher say now? Yeah, that happens, Paulie. What you'll do is, Paul, as you get more experience over time, you'll get better at placing your stop losses, but you have to really measure. So one thing I used to do when I coached and mentored people was I had them trade normally, and then I had them trade with 150 pip stop loss. And they're like, 150 pips, that's crazy. I'm like, I know it's crazy, but that's not the point. The point isn't to have 150 pip stop. So I say, trade normally, and we'll come back in a couple of weeks, and we'll see which one did better. And so what they would do is every time they made a trade, they would take it, let's say on their live account, they would trade normally, just take the shot, put in their normal stop wherever they wanted, but then they would take the same trade and put it on a demo account. But instead of them setting the stop, they had to put the stop 150 pips away. And so after a week or 2 or 3 of this, we'd come back and see which one did better. And I don't know if Daniel's in the room today, but we did this with Daniel one time. And in that first month of doing this, he was up over 1,000 pips. And he's like, I made 1,000 pips this month, Wayne. And I'm like, yeah, is that good? And he's like, yeah, it's great. I'm like, yeah, it's great. I'm like, oh, so now here's what we recognized. Your risk management is poor. So let's work on that. And the next month, he made another 1,000 pips. So it was really good. And of course, that's all swing trading too. Because you're not scalping. You can't scalp with 150 pip stop. But anyways. But my point, though, Paul, is not the pips. So you got to listen to the message, right? The point is we measured and tested and then reflected. We gathered intelligence and formulated a strategy. So what was wrong with Daniel's trading? And I very quickly found out he was a fantastic trader, but we needed to work on his risk management. Okay? It wasn't the entry, it was moving the stop too quickly, for example, or having the stop too close. So often when I say, guys, you need 150 pip stop loss, I'm like, oh my God, Wayne, if I took 150 pip loss, I would lose 20% of my entire trading account. And I would say, oh, well, good. We just learned something now. You're over leveraged. And then they'll say, well, I only have one micro lot. Oh, well, then we identified the other thing. You're undercapitalized. Right? So you can learn a lot if you measure. Okay. But anyways, going back to this, remember like a day or two ago, I was preaching that there's a difference between news and fundamentals. And there's more to trading successfully than jumping on a news trade, but having longer term trades based on fundamental analysis, macroeconomics, and all that kind of stuff. I've done that a couple of times recently. My whole point, though, is like reacting to this news is one thing, but having had planned it for 2, 3, 4 weeks, that's much easier trading. Okay. So if you want to trade 8 hours a day, by all means do this. But I still beg that you become consistent in your trade plans, not buy low, buy and then sell and buy and buy, sell, buy, and you're all over the place. I still want you to be consistent. But you could do this probably 1 hour per week for weekly swing trading, and probably even just 1 hour per month for monthly swing trading. So if you combine it, let's say 5 hours a month, you could make, I would say, I bet you anything you'd make more money. But anyways, 5 hours per month as a swing trader versus 8 hours a day as an intraday trader. Now, I'm not saying one's better than the other. In fact, I think you should do both. But what kind of resources do you have available? Do you have 8 hours a day available? Or is I'd say 5, but let's say 8 hours a month. Do you have 8 hours a day available for trading, or do you have 8 hours a month or 8 hours a week? Like, what kind of schedule do you have? I think if you had 8 hours a week, you could do better, just as well or as good as someone that trades 8 hours a day. Okay, you just can't do little things like piss around with scalping the news. So if you only have 8 hours a week, it would be a crying shame that you would make, 30 quick pips on a new scalp. You're like, what's wrong with 30 pips? Well, if you were making more, right? If you were, let's say, as a swing trader, you were making 300 pips a week, you don't need to piss around and take the risk and take the volume and volatility and the higher spread and all that kind of stuff and take the risk and make another 30 pips. You're like, I'm cool with my swing trading. Like, look at this. Here's what we did last Friday. Like, I even still have it highlighted. Hey, man, if you're a bear, you should short here, and this is your target. Like, that's the kind of trading you should be doing if you only have a few hours a week. You're like, what did you do this week? Oh, I sold on Monday, and by Tuesday I was done. Okay, good. What's your next plan? Well, I'm going to sell here and be short for at least 4 weeks. Like, who cares about 30 pips, right? Now, again, I'm not poo-pooing on the smaller time frames. What I'm saying is you should learn one thing first, and then what will happen is then you drill down to day trading. Then you drill down to intraday trading. Then you drill down to scalping. And scalping and intraday trading will make you a better swing trader. You see what I mean? So eventually, I want you to become an expert at everything. But too often, people are looking for the yellow Lamborghini on the 5-minute chart, and they never learn how to trade. Nor do they find the yellow Lamborghini. I always taken the view that stops and their use management, etc., are the least talked about thing, cause a lot of people trouble. Well, yeah, but so the exiles, yes, I will grant you that, yes, but do not twist it in an argument for trading without stops. Okay, that's where I stand hard and firm. So yes, most people don't understand risk management very well. In particular, stop placement and when to move. Yes, that is true. And even if you're a professional with 25 years of experience, it's not an easy topic. However, do not argue with me on the fact, like, do not say, therefore, you should trade without a stop loss. That's mentally deranged. And I'm not saying that's what you're saying, but we're on that cusp where a lot of people would take the next step and say, if it's causing lots of people trouble, then you should not use them. No. If risk management is an issue for you, spend the next 1 year doing research and practicing risk management until you are the world's greatest expert. That's what I would like you to do. Right? No, I know you didn't, but that's what other people have. So it's a good opportunity. Your statement was a good opportunity for me to coach, right? So I'm just doing my job. I'm not picking on you. But that's how I would do it. So, like, for example, there was a time when it was a fact, everybody knew this fact, that you couldn't trade a 1-minute chart because it was just pure noise. I was going through a period where I was doing really good in my trading. I had a fantastic year. So I said, well, I want to challenge myself. I don't want to just get caught in this one thing, because what will happen is that one thing will stop working and I would have forgotten everything else. So anyways, after a fantastic year, I said, well, how am I going to challenge myself now? And I said, oh, well, I'll do the impossible. I will trade the 1-minute chart. Okay? And I'll do so for a year. And I'm not joking. So for a year, I traded the 1-minute chart until I feel like I mastered it. Every single day, hours and hours and hours a day for an entire year. And I took something that was a weakness of mine and I made it a strength. Fundamentals used to be a weakness of mine. Now it's a strength. Technical analysis I didn't know anything about. So I looked for resources, and there were no resources I could find on technical analysis, specifically towards Forex. And I wondered, like, what is Naroon? And what is a awesome indicator? And what's a MACD? And what's an RSI? And what's a CCI? And what's the difference? And what are these moving averages? And which moving averages should I use? And should they be exponential? Should they be simple? What are these other things? And in my chart, see, when I first started, there weren't even charts. You have to go that far back. There wasn't even charts. You got a trading platform. It was just prices blinking. So then later on, I got a chart set up, and it was like IntelliCharts or something. Um, and I paid like $300 a month, and I got a feed in there so the candles would move. But of course, you couldn't trade from your charts; they were just for analysis. So, anyways, I looked at, and there were like over 100 indicators, and I didn't know anything about any one of them. I didn't know which ones were weird and which ones were standard because back then there were none. Just moving averages were wild. This idea that you had a moving average crossover, I'm telling you, that was a pretty new thing. Now you might argue and say, well, going back to the 1960s, people did that by hand. Yeah, but not on a 2-minute chart or a 3-minute chart or a 5-minute chart. Because I used to trade the 2-minute, particularly the 3-minute is actually a really fun chart. I love the 3-minute. I just can't do it on MT4. And I know you can get a periodicity adjuster, and I don't do any of that. But maybe I could. But the point is, I went from zero knowledge about trading and I became an expert because I actually broke down the indicators and did math. And I said, well, what's the logic behind a MACD? And I was shocked because it's not called MACD, it's called MACD. And so she kept going like the MACD, the MACD, and the MACD. And then she was coaching it out of the standard numbers that are on the default settings. It's like 12, 26, 9 or something. I'm like, what the hell does 12, 26, 9? Like, who trades like that? And I realized, oh my God, she doesn't know what the hell she's talking about. Really? Lost me. Oh, it's back up. All right. So anyways, I'm like, it occurred to me like, she doesn't know what the hell she's talking about. And it turned out she was just babbling. So I had learned by studying the math that she didn't know what she was talking about. I'm like, scammer, but whatever. And that was that. So no one has ever really taught me anything about technical analysis. So what I found was once I understood MACD, for example, I said, oh, well, what do I want MACD to tell me? I said, well, I want MACD to tell me when the market has turned from bullish to bearish. Are you back? You got hello? Oh, so yeah, I guess I'm back. Maybe a hurricane-related internet crises. No, and gone. No, it should still be here. Yeah. Well, half of you say back, and other people are saying not back. But anyways, yeah, 20% of the frames were dropped a few seconds ago. So yeah, maybe it's hurricane related. Sorry, guys. Hopefully we don't have like 5 separate videos today because YouTube has a heart attack when the feed drops. Apparently, YouTube can't figure out when the feed drops versus ending the webinar. So what I was saying before I was so rudely interrupted by the hurricane was this person didn't know what they were talking about and they didn't know anything about trading MACD, and it sort of just reconfirmed my bias that I just have to teach myself. So what I wanted to say is that when you run into a challenge, you run into a weakness, you focus on it and you become an absolute expert. Okay? So if risk management is a problem and you think about it for a while and you're like, this is a real big problem, you should spend at least a year fixing it. Okay? Make sense? Andrew, I'm updating everything on the chart template download. So that is coming up hard and fast. It's probably, I'm not going to be able to work on it today and I'm out with the family for part of the weekend. Then I got to get back for my hurricane refugees to move them in. And there are 3 cats, by the way. Did I mention that? The family's moving in with their 3 cats. I have a dog. I have a huge, monstrous Scottish coyote. And so it's going to be very interesting. But I guess cats don't like hurricanes either. But yeah, Prince Philip, I'd say at least a year. And I'm totally deadly serious. Okay. Okay. Deadly serious. You should focus on it for a year. And I don't know if you missed that story before we got cut off, but I spent a year trading the 1 minute chart so I can master it. Okay. Well, Prince Philip, I think the first thing you should do if you want to really, really seriously analyze your trading is to go through Live FX Bootcamp. So the idea is like, imagine you're a golfer and you want to improve your golfing. So I was at a Ritz-Carlton last weekend, and it had like 3 golf courses, all professional. I think they do the senior PGA tour there and stuff. And they have a golf facility where you go in and they record you from your swing from different angles. They'll fit you with golf clubs. A golf coach meets with you and analyzes your specific training, well, in this case, golfer, and compare you to different golfers. And then they go out in the course with you, and it's like hardcore professional golf training, right? Using the best technology, best techniques, and all that kind of stuff. Now, golfers casually spend like $5,000 or $6,000 on this. Okay, you understand? So you can get something similar, but for Forex, and that's what live.fxbootcamp.com is. We will analyze your trading to a level of degree that you can't even fathom at this point. I would start there and then identify your strengths and weaknesses from that, and then set out a path for what you should work on over the next year to massively improve your trading based on real analysis, not guesswork. Okay. Sharif, how about tradersway.com? Sharif wants to know if anyone could recommend a good broker. Traders Way is the sponsor of this webinar. Why don't you start there? Tradersway.com. Okay, Sharif? Cool. All right. So let's move to a different pair. Gold. Don't need to be on that daily. Cool. So it's holding up on support. The pivots are quite wide. The danger of this is it's not necessarily bullish, right? But it's on support. So really you should be looking for a Monday step up, depending on where we are on the weekly and monthly pivots. That's just day trading. So you can see bulls have had plenty of opportunity to buy it today, and bears have one opportunity to sell it. Let's take a look at a different leading indicator. This is what we set up yesterday, if you recall. What did we say yesterday? Bottom, up, down, buy. Right? That was it, right? That was our trade plan yesterday. One, two, three, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. All right, so we were up here. So we still kind of, so we were here looking for role reversal. The question is now, if you add up the general idea, okay, remember this is a guide. It's not perfect. It's a guide. That's the general idea for this. But we were talking about it way over here, right? Okay. Which means, actually, if you've done this, you should have done it really when we were down here, and then up here, and then been ready. So really, that was the trade. So to follow up with this, you could fib, but my point now is the timing. So remember I taught you yesterday on how to trade gold, right? Timing is everything too. So gold and oil, I like to start trading at 7 a.m. Eastern time. Okay. So this is the 8 o'clock hour. This is the 7 o'clock hour. Okay. So I would be at my charts right at that open. There's a good reason for it, right? That's probably the same as this right in here. That's when you should start trading. If you go back. So that's when I like to do gold and oil in the United States. Now, if you're doing gold and oil out of Europe, it'd be a different time. Okay. Oh, Gary says, hi, coach. My swing.fxbootcamp.com page is blank. I've registered successfully. Yes, so you don't have a membership attached to it. So I'll have to do that before today's webinar. So today's webinar is at 11 a.m. Eastern time for the swing traders. And yes, we are going to move it to Thursday. I wasn't able to do it this week. So send me an email, Gary. So you have an account, but it's empty. That's why when you log in, you're like, there's nothing here. Yeah. So we have to figure that out. So email me, okay? Swing traders, we'll swing at 11 a.m. Oh, right. You should be notified by the, anyways, automatically, and I'll probably send out one myself to remind you guys. Yes, Greg, send me an email. But if you're switching, that means you have to quit performance coaching, and that's a big decision. All right, so we did that. Let's see, gold. I guess we can get a little more clear. So some people asked about gold. I looked at this, and I'm glad you asked, because sometimes I forget. I look at it and I'm done. I'm literally done in about 1 or 2 seconds, and I forget. Sometimes I don't explain it, right? But anyways, there's your sell zone. Here's your buy zone. So I think I looked at it and said bulls had a couple of opportunities to buy today. Oops, I wanted this. Right? I think I said bulls had a couple opportunities to buy today, and bears only had one. Right? So that's it. So I looked at it and I was done faster than I could even say that. So these are dailies, right? This is for day trading. So if you're a bear, I don't know, you should know that this is your sell zone. Okay. So I forget. So I apologize. If I don't explain things clearly, you need to ask, okay? I just, you know, I don't know if I assume or it just doesn't occur to me that that's not clear. If you're a bear, if you're a bull, well, my God, I mean, you're on support, right? You're on a pivot swing. So once again, I just think you know this. You know it. I mean, it's like it's factual. That's where you buy. This is where you sell. So again, if I'm not clear on something, please ask, and I'm happy to go through it. I suppose if I spend 1 second, that's not enough time to clearly explain, right? Yeah, Greg, I think the way it should work. So Greg said, so if you have an account and you log into the swing trading group and everything is blank, that means you have an account, but there isn't anything associated with your account. So now, but you're logged in, which is important. Then go back to that link and do it again, and now it can associate it. Okay. But anyways, okay, good. I think we're fine here. We're fine there. Let's move Kiwi Swissy off of this. But this is a double bottom. Like you have to remember, like a week ago, why is Kiwi Swissy even here? I think we did it on Monday, or we did this last week. I can't really remember. Remember the cusp of the conversation though was that's the assumed place to buy if you believe or think the market's going to reverse upward. Remember that? This has been down for months, and yet we hit this, and that looks like a double bottom, right? And that kind of feels like it wants to do that, which is the thing we predicted 2 weeks ago when we were way up here, right? So I just want to point that out again if I haven't reset it. This is from 5 days ago, this analysis, but the trade plan has come together pretty remarkably well. I would love for this to go up, but I don't think it will because Kiwi's so bearish. But I look at that and think even Kiwi Swissy is at least flirting with the idea of reversal. What if something was actually bullish? Then it would for sure be up, right? So then you might look at that and say, pick something, let's say that you might be more bullish on. So let's say you were more bullish on Aussie. I don't know, I'm just picking one, right? So you don't like Kiwi, but maybe you like Aussie, right? So you go to Aussie Kiwi, and it's got a bigger step up. It didn't even double bottom. You understand that? So Kiwi dropped all the way down here and went up. Aussie just 1, 2, 3. Not even a 1, 2, 3, just higher high, not even a higher high, well, higher low up, right? But what is the congruency here? Not the double bottom, because we didn't get that. It's too bullish for a double bottom. The market's too certain of this going up. But what price? Seems pretty close to the price that we talked about. Okay. Neat, right? So let's put some different currencies here. Let's change this up. Let's put pound dollar here. And let's put euro yen there. Can I just mix this up a little bit? Beast we already have. I guess it's okay. So let's switch this then. Let's put Aussie yen here. Just farting along. Farting along. Getting caught. as you can see all the resistance here, which is quite obvious. It's very obviously there. My entry is not a good position now just because nothing's happened this week. So the central pivot is low, not high. That doesn't bode well for me because a bull would have it planned something like this. Plan A, plan B, right? Notice both plans knock me out of break even. But don't cry for me. I've earned 1 week of interest payments. Okay. And you might say to yourself, Wayne, that's not a lot of money. It's pennies. I'm like, okay, well, let's try to play with the logic here. Because I agree with you, it's just pennies. But I want you to change the way you think. Because someone that thinks it's only pennies will then think about money and make maybe wrong decisions. I'm long, and because I'm leveraged 100 to 1, I will earn 200% a year in interest payments. So if I get knocked out of break even on this one, but I collected a week's worth of interest, I got 1/50th of 200%. And then maybe I buy it again next week after a bounce here or bounce here. And if I buy enough of this pair because I like to trade it and I know I'm a bull and I can clearly identify support and resistance, so I'm buying at support. Because of that, if I focus on this pair on a daily basis, I look it up to say, hey, should I buy it today? Should I not buy it today? Over the course of the year, I would have held this close to 100% of the time. Because remember, I only have to hold it over rollover. So let's say of the 365 days, let's say I'm long Aussie yen, 300 of them, 300 days of the 365, or should I say 300 rollovers of the 365 rollovers. So anyways, I would have collected that percentage of that 200%. And you're like, it doesn't add up much per day, but over the course of time, it does really, truly add up. Now, also don't think about just today. I mean, I'm always teaching about thinking of bigger pictures and stuff. What about 10 years from now if interest rates are going up and not going down? Then if you're in a carry trade like this, if rates go up, first of all, your currency just skyrockets and you make a boatload of money in one day. But you also get a pay raise in the interest rate differential. Now, if you own bonds and you collect a 3% coupon, nothing happens. If the next month or next period or sometime in the future, the same issuer of the bond, so if it was a government like a treasury, interest rates change, right? Or let's say you buy Ford Motor Company and they're paying you 7%, and then a year and a half later they offer 9%, and you're like, well, you only offered me 7%. They're like, well, yeah, well, we have a deal. It's a contract. We will pay you 7%, but new money that comes in, we'll offer them 9%. Well, they don't offer you 9%. You're stuck at 7%, and because anyone on the planet now could go and lend Ford Motor Company at 9%. The value of your asset, because now you can sell your asset to anyone you want because there's a cash flow to it, your asset's now worth less. So it's like, what if you own an apartment building and the average rent you're collecting is $1,000 a month and you can't change it? Let's say you're locked in because of regulations, right? The city says your building's rent control. So you collect $1,000 on average per door, per key, right? Per door. But then across the street, someone builds a new apartment building. It's a little nicer than yours, and all that kind of stuff. And for whatever reason, it's not rent control. And they're charging $1,500 to $1,800, and their nice ones are charging $2,200 a door. Your apartment building's worth less. That's it. Why? Well, the apartment building over there collects better rent. So it's just you've just lost some value, right? So anyways, bonds are like that, but not currencies. If Australia decides to raise interest rates, you get a raise. So That's how I look at things. I'm loaning money to Australia. I'm loaning money to Mexico. I'm loaning money to Turkey. That kind of stuff. Okay. Yeah, free interest on a risk-free investment, right? I like that because my stop's at breaking. So I could collect the $50 now and be super happy, but maybe I don't. Okay? Maybe I jump out today. Maybe I don't. I don't know. But just food for thought, guys. Food for thought. Think bigger than today. And another reason I say that is you may have tried small trades over, let's say you've been trading for 3 years and you've been trying scalping and day trading, right? And you've tried all kinds of day trades, but you're typically in your trades for less than 4 hours. I think that would probably describe most people that come to this webinar, right? Most trades are 4 hours or less, and maybe you've traded for a year or two. And I think you will have discovered that it's not the most effective form of trading. Sometimes you do well, sometimes you don't. Sometimes you have a bad day and it ruins your entire week. I mean, have you ever tried that? One bad day ruins your week, maybe your entire month. Shouldn't that be a red flag and say, like, if you looked at it statistically, the math doesn't add up. If you have one bad day and it blows out your whole month, or it ruins your whole week because of one bad day, maybe the method of what you're using is flawed. Right? That's all right. We'll tweak that. We can fix that. But you have to recognize it first. Okay. So anyways, take a look at Kitty Cat. How's Cat doing versus Kiwi? See why I didn't want to be long Kiwi yen? Or I think it was Kiwi Swissy, right? I'm like, even Kiwi Swissy is looking like it wants to go up. But look how pathetic Swiss franc, look how pathetic New Zealand dollar is. Just pathetic versus the CAD. Just pathetic. So now put it like Kiwi Swissy was thinking about going up? Like, even Kiwi Swissy? Like, really? Wow. There must be something very nice going on based on macroeconomics. This one we already know, but we'll look at it. That's kind of where we are, stuck in the middle. Not very helpful if you don't have a bias. Now, if you have a bias, you would have shorted yesterday, the day before, and 2 days before that. Who knows? But it's not really, I don't want to take strong versus strong, so I'll really ignore it. Here's your CAD Swissy. Remember the pound Swissy looked kind of mediocre? Look how beautiful this one is. Remember, I've talked about it over and over and over and over and over again. My bias for oil is up. My bias for commodities is up. My bias for macroeconomics is up. And I believe a lot of what's happening is due to summer doldrums. And I've coached you for months and months now to be prepared for the doldrums and be prepared for the new money to come back to the market. And I think, to me, a lot of this is exactly what I've been telling you about. So remember, way more than a week ago, I told you, be prepared, right? Be prepared for the market to come back. Why was last week our first swing trading meeting? Because I told you 6 months ago that the third week of August, the market's going to wake up. Can anybody concur that 6 months ago, 5 months ago, 4 months ago, 3 months ago, 2 months ago, last month, I said, get ready, the markets are going to wake up the third week of August. And that if you don't plan things in advance, it'll wake up without you. And a month will go by and you'll say, holy crap, I missed 1,000 pip move, right? right? Like there's nothing on the chart to tell you it's going to happen. But by gosh, it's going to happen. Okay, look at Monday. This is the day. Now we have a higher high. We went from a quadruple bottom to a higher high. Hello? Wakey, wakey, right? Remember, people that are not prepared will not even see this coming. And they'll say, oh, it's Trump, or oh, it's the Chinese, or oh, it's Brexit, or oh, it's the hurricane. And it's always something, bro. But if I can tell you 6 months in advance, factually, get ready, because here it comes. Ron says, I've been saying it for years. Of course I've been saying it for years. But imagine, like, that you're not on these trades. Yeah, smell the coffee or smell the concrete, right? Huh. That looks pretty good. That's a start. Okay. Over the last week, you should probably have 5 to 10 trades open. Or life is going by without you. Are you right? Am I right? Which one? Have you put in twice as much time this week than you normally do? So when I tell you, based on 15 to 20 years of experience, that you should be ready the third week of August to get going, and all this money is going to come back and the markets are going to move, and you need to be in it and you need to be prepared. In fact, you need to start trading and getting in some of these trades. Someone with all that advice comes to you and you're like, yeah, this week's going to be like last and like the week before and the week before, and I'm not going to change my behavior, and I'm not going to add in more focus, and I'm not going to put in more time. And I'll just listen to Wayne, and he'll do his webinar, and he'll tell me how smart he is and how awesome he is, and I'll just go through life. And or did you say, here it comes, the tsunami's on its way, I need to do something? Hey, there's water at my feet. Wonder what that means, right? Have you changed your behavior, guys? Right? Have I prepared you enough? When I tell you over and over and over again, the third week of August, it's going to start moving. You need to do things. You need to have plans. You need to have set your bias. You need to get ready to get going. I hope you change your behavior is what I'm saying. What more should I do? There's nothing more I can do. I practically told you what's going to happen. So now you just have to decide. What I prefer is you tell me your bias, and then you put together a trade plan on that. Okay? Do you think macroeconomics are going to deteriorate? No Trump-China deal gets done. Geopolitical risk increases. The election year kills the U.S. economy. And you're like, Wayne, I see nothing but gray skies ahead. Cool. Sell right here. Cool. Right on. Get ready, dude. Come on. Get ready. If you think things are good, you bought here where I bought. Right? And then you probably bought another one here. Then you bought another one here, and you bought another one here, and you're going to buy another one here, and you're going to buy another one here, and you're going to buy another one here, and you're going to do this for CAD yen, you're going to do this for Aussie yen, and you're going to do this for CAD Swissy, and you're going to do this for Aussie Swissy. Okay? If you think macroeconomics are bad, you're selling CAD yen, but you're selling, more importantly, Kiwi yen. Right? What else? You would be selling Kiwi Swissy. And probably Kiwi Dollar. You see what I mean? You need to be ready and on this. You're almost already too late. Not that you can't get in, but like if I've told you this every single day for the last 100 days, and I probably have, and you ignored the advice, do you understand that it's not technical analysis and not fundamental analysis? And are you confident enough to tell yourself, you know what? Wayne's right. The thing holding me back from achieving my destiny and living the life I want is not technical analysis and not fundamental analysis. It's me. Then you should make the change. Like when I say I'll focus on the 1 minute chart for a year, or I would focus on risk management for a year. What would you do if you said to yourself, Wayne gave me solid advice every single day for 100 days. I know he's right. I think he's right. He's probably right, but I ignore it. What are you going to do about that problem? And you know what? If you're a strong enough person, because that means you have to put aside pride and say, I'm going to fix that. I need to develop something. Maybe it's a personal discipline. What are you going to do about that? What if you had the crystal ball and the magic genie and you still were not successful? Right? Like, you're like, yeah, Genie, that's a good point, but no, I'm not going to do that, Genie. Makes for a terrible story. Right? It's not as good of a story. They're not going to make a movie about that. I was talking about with my kids over dinner probably 2 nights ago, and I said I was watching an old one of these channels like where I actually turn the TV on, which is really strange, and actually watch like TV. And I was flipping through all the channels like TV people used to do, and it came across this channel, I guess, that just shows all old movies all the time. And I guess they probably get them for free, which means they just have to pay for the broadcasting air rights, and then they sell ads, right? Anyways, and for some reason they showed, like, I guess they were killing time in between movies, and they showed this like 20-minute documentary. It wasn't even a full half hour. 20-minute documentary about the entire life of this actor. And I didn't even know the actor's name. And he was like from the 40s and 50s and 60s and 70s and 80s. He was in Hollywood for 50 years, but he got his first movie appearances because he was a young, good-looking guy. But he wasn't a character, he was just a young, good-looking guy. And then he started getting sort of smaller characters, but he was a young, good-looking guy, but he got cast as the Playboy. And then that kind of led to supporting actors roles, and a little more complicated, but he was the conniving pretty boy. And then 8, 9, 10, 11, 12, 13, 14, 15 movies goes by, and then he starts getting sort of the leading man role, and he starts doing this, and it goes through his whole life to the point where he's an old man in Hollywood. In the 1980s, he was getting movies about being a grumpy old man and stuff, but not the grumpy old man you probably were thinking of. This actor I didn't know, but and it went through every single movie he ever made, and how his life had changed, and the roles had changed, and all the famous people he'd worked with, and all the awards he had won, and how he changed movie studios and affected his contract. It was really interesting. And then he dies, an old man. And I said to my kids, imagine that you lived your entire life, and at the end of it, there was nothing to make a documentary about. You did nothing special. They all showed up, and they're like, oh, well, let's do a summary of this person's life. And they're like, well, they were born, they consumed a lot of food and oxygen, and increased the amount of garbage in the garbage dump, polluted into the air, cut down a bunch of trees, and then died. It'd be very short. So if there are organizations that make documentaries about people's amazing lives, do them a favor, give them something to report, do something amazing with your life, just in case someone shows up to make a documentary. Imagine where they come to this house and they say, Wayne McDonald lived here in his 40s. Try. Right? Try. That's the message here. What are you going to do to improve? Is it technical analysis? Find one thing and master it over the next 12 months. If you're not very good at money management, focus on that one thing for the next 12 months. If you're not good at fundamentals, focus on that one thing. Focus on central banks and become a master. Read every central bank report, get to know every central bank around the world. Just absolutely throw yourself in. Anything and everything to do with central banking, do that like ridiculously for the next 1 year. Do something amazing. Master something. I don't care what it is. Just master it. Okay? Stop playing with Forex. Stop pissing around with Forex. In 1 year from now, maybe write it down. 1 year from now, the third week of August, let's say, of 2020, you will be a master of one thing. What is it? Be tenacious. Be ridiculous. Trade a 1 minute chart every day, 8 hours a day for a year. And then say, you know what? I know a thing or two about 1 minute charts. Okay? Don't worry about being ridiculous. Try to be ridiculous. Oops. Let's go to the, there was a yen in there, wasn't there? Let's do the yen one. Ask yourself, how can I be ridiculous? And then start being ridiculous. Okay. So guys, I would stay away from USD Swiss franc because they're both funding pairs right now. So I wouldn't be trading them. No, Connor, no, that would be mentally insane, Connor. That's exactly the opposite of what I've been saying for 20 years. I don't know the future. Let me say this. Hello, my name is Wayne McDonald. I'm a foreign exchange trader. I tried to trade what I believe is the future, but I have no idea what the future holds. I don't know if the market's going to be bullish. I don't know if the market's going to be bearish. However, I do know how to set up proper trades in the direction of that bias. I will make a decision based on analysis, not by hope, not by guessing, not by gut feel, not by what somebody says on CNBC or Bloomberg. I will analyze the market myself. I will look at the fundamentals, which means the economic reports of every economy around the world, and I will pay attention to what the central banks around the world are telling me. And from that, I will make a decision. I'm a buyer or I'm a seller. And I will be a buyer or seller for periods of months and months and months, maybe even years. And based on that information, I will buy at support, ideally in an uptrend, or I'll sell at resistance, ideally in a downtrend. And if I'm wrong, I will not get very many trades. If I'm right, I'll make a boatload of pips. So, going back to Mr. Whoever, Mr. Whoever, and it's back up to Mr. Connor or something, you make a decision too. And if you completely disagree with me, I probably completely don't disagree with you. I can see just as many reasons to sell as to buy. What I care about is you make a decision if you're a buyer or a seller. And then from there, I'll understand your trades. You can show me all your trades and they could be the opposite of mine. And I'll say, that's a good looking trade. And I know why you took it. I can see it too. It's just not my bias. Maybe I have the wrong bias. Maybe you have the correct bias. Then you get paid. However, you will find, I think the majority of the time, if you look at trading over the course of months, quarters, and years, that if I say bull and you say bear and we do our job properly, we both make money. The person that gets the market right, which is your bias, makes more money. But at the end of the year, we both make money. The people that lose don't have a bias, they can't put together trade plans, and their trading's very inconsistent, which is guaranteed poverty. So even if you're right, you can't make money. Even if you're wrong, you can't make money. You just lose, right? But if I'm selling at resistance and you're buying at support, most likely we're going to both make money. But the one that's trading with the market makes a lot of money. The person trading against the market is not making very much money. Yes, alpha and beta. So I try to trade with the market, but I may fundamentally disagree with market conditions now based on fundamentals. So I'll say, like over the summer, the market has been bearish. I understand that, and I understand all the reasons why. But I'm also trying to guess what's going to happen in the next 3 months. And by guess, I mean have a bias or hypotheses and a way to confirm or deny the hypotheses, right? So I'll say what's happened over the last 3 months is not necessarily what's going to happen over the next 3 months. Can anybody agree that that might be the case? I'm not even saying that it will be the case. Is it reasonable to say what's happened the last 3 months may not be what's going to happen in the future 3 months? That would be a hypothesis. If the last 3 months has been down, maybe, just maybe, it's no longer down. Maybe, just maybe, it's possibly up. Cool. Great. It's a hypothesis. So now what? If it was down, but it may no longer be down, the first thing we're going to need is support. Good. Let's use some technical analysis to identify where support might be. So I get out my handy dandy notebook, and I say, maybe it's here. Okay. Let's get rid of everything. Let's go naked. And I'll do naked with weekly. Yeah, I guess we'll do it. Okay, so it's been down, 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 down. Great. Probably still going to be down, guys. If you want to be a bear in this, be a bear. You'll love it if you sell at resistance. If you want to be a bull, well, where could it possibly be a bull? I'm not saying it will be bullish. I'm saying if it were to be turned bullish, where would you buy? I have 2 prices in which I'll consider. I would buy here, and I would buy here. Great, cool, right on, nice, nice. Good thing I'm long in the first one already. Cool. Nice, good job. If it goes lower than that, there's no bottom. This falls forever. Or at least I say I'm wrong and I got to stop. So to Mr. Whoever that said, hey, so Wayne, what if I was a bear? Should I do what you're saying? No. If you're a bear, it's just as easy, right? So what's the trade plan for next week? There, done. Okay, sell at resistance. Where's the resistance? Here, here, and here. Cool, sell there. What's the big deal? Why is it so difficult? Why are you holding back? Sell high. No, Wayne, I want to sell low down here. No, that's foolish. How do you sell this week? Oh, well, this would have been good. Why? Oh, let's see. It's monthly resistance, weekly resistance, next week's resistance. Yeah, you should have sold at resistance if you're a bear. If you're a bull, where should you have bought? Well, how about a support? It's monthly, it's weekly support. It's off, right? It's a 50% roll reversal on what could be a triple bottom on next week's central pivot. Like, if you're a bull, why would you not buy that? I don't understand. It doesn't make sense to me if you were a bull and you didn't buy there, right? So if you were a bull and you bought there, you made money. If you're a bear and you sold there, you made money. And they're very, very clearly buy and sell zones. Okay? And right now, you notice something? Both bulls and bears would be profitable. Both bulls and bears would be profitable if they just did their job. Bulls buy low, bears sell high. All you have to do is find a resistance, and that's not hard at all. That's like the easiest part of Forex. And if you're like, Wayne, I really don't know how to identify support and resistance yet. I say, you know what? That's good news because that's not complicated. If it is complicated, you're doing something wrong. You're making it complicated, right? But this is clearly a sell zone. This is clearly a buy zone. Okay? Okay. So why am I long at that price? Because I was waiting for this. We actually talked about this here, and it opened low, and an aggressive me would have bought off the bottom here. But I'm not trying to be aggressive with my coaching account. Okay, this is my coaching account. So what would Wayne do if Wayne was teaching this class? He would say, wait for the higher high. Okay. So this is 8 hours I had to wait. I know, too fast, right? And then what? I need a retracement. So I bought the dip at support on the weekly M2. But isn't that what I teach? Yeah. That's the conservative, disciplined approach that's teachable. It's repeatable and it's teachable. And if this happens, we get paid. Or I get paid in this case, right? But if there's just too many bears sold here and bears sold here and bears sold here, and bears want to sell here and all this kind of stuff, if bears take over, guess what happens? This. And I don't lose any money. But whoever had a trade plan and sold at the top like they were supposed to as a bear, well, they got paid. So I really don't care if you're a bull or a bear. And if we were hanging out as buddies and you're like, hey, Wayne, I totally disagree with you on this Aussie yen. I can give you like 6 or 7 reasons why this is going to fall. I'm like, oh, tell me. I'll buy the next round. Bartender. Okay? I'll say, I'll have a Manhattan and he'll have, I don't know, a house Chardonnay. Anyways, so the bears come in, they're like, Wayne, I totally disagree with you. I'm like, I'm going to just crush this thing to the downside. And you do. Cool. Good job. Right on. I don't lose any money. Shoot, I collected interest on this. I could take profit right now, but why? It's 20 pips. Why would I even take the risk for 20 pips, right? So anyways, 40 pips. So I can take 40 or 50 pips profit right now. Who cares? I don't care about 50 pips. So anyways, but it might do that. And both of us will laugh about it at the end. I'm like, hey, man, you nailed that on that Aussie yen short. Good job, man. Good. Awesome. I'll catch you at the next support, right? And that's how you should be trading, guys. Trade like you know something. If you even feel like you're trading and you don't know, like, I don't know what's going to happen today, should I buy it, support or resistance? You should document that and recognize that if you don't know what's happening today, you didn't plan it yesterday. And that's what I want you to change. That's what I want you to focus on, guys. I don't care what indicators you use. You can use my indicators. You can use something else. Okay, I used to use MACD and RSI religiously. Okay, I don't care so much anymore. They're helpful, but see, I actually see them. I calculate them with my mind. So I just look at the chart and I can see MACD and stochastics, even if they're not there. But if you say, well, Wayne, what if I use CCI? Right on, brother. All the power to you. It'll work great because it's an algorithm. It doesn't matter. You should know what the algorithm is telling you. That's what I was babbling on about the MACD. Someone was teaching MACD to a group of amateur traders, and I very quickly realized, because I did the hard work and I made the sacrifices, and I put in hours and hours and hours of study of MACD, and then I get a glimpse of someone else teaching MACD, and I realized they're morons. They're mentally retarded by choice. And I'm like, this person doesn't know what they're talking about. I clearly know they don't know what they're talking about. And then I realized, you know what? I'm the expert in MACD. I can teach MACD. And I realized, like, why? Because I put in hours and hours and hours, right? So that's all I'm asking you to do, is put in the hours and become an expert. That's all I'm asking for, guys. You do the hard work and you become the expert. Okay? Maybe because you're an expert, we can work together in the future. Okay? So you need to give me, like, for example, 5 reasons why this is going to go up, or 5 reasons why this is going to go down, and then trade it. This looks like it's going to fall. Okay? But I'm trying to be a cheeky monkey here and fold in some seasonality and maybe catch a reversal that is not based on technical analysis at all. That I talked about it months before it happened, told you exactly which week it'll happen in. And because of that, maybe in a month, the technical analysis will confirm that I was right. Now that's a little bit, that's the next level, right? But don't worry about that. Don't worry about that. Focus on what you're focusing on now. Let's figure out your technical analysis, and then you'll learn some fundamentals. And once you understand fundamentals, then you'll learn about central banking policy and monetary policy theory and all this kind of stuff, money supply and all this kind of stuff. And you'll grow to be an expert in the fundamentals of macroeconomics, and in particular, the monetary policy that changes the value of currencies. Isn't that what a Forex expert is supposed to know? Are you supposed to know the difference between PPI, CPI, and PCE? Is that really going to make you a better trader? You should know, but no. Should you understand how the monetary policy of a central bank will change the value of a currency? Hell yeah. That's what you need to know. So keep your eyes on the prize. But do you need to know that this year? No. Or next year? No. Don't worry about it. Okay? Because if you don't have patience and discipline to even carry out a technical plan, how are you supposed to figure out the other stuff? Forget it. So maybe in year 3, you'll do some fundamentals and get really good at that kind of stuff. But I want you to be a huge success, and that means years of sacrifice and hard work. And if you're okay, if I'm scaring you, don't worry. There's always, you can flip real estate. No money down. I mean, imagine that dream. You can flip real estate even though you're dead broke. No money down. You can flip real estate. Make millions. You'll date girls in bikinis and drive exotic cars like my yellow Lamborghini. And you can buy these houses with no money. And get super rich. Hey, if Forex didn't make you filthy stinking rich, you can go flip real estate and get filthy stinking rich, right? Like, it's just so funny. It's so funny. What are people thinking? I guess they're desperate for hope, right? Yeah, UPSs are in for Christmas. I guess people are desperate, right? They're desperate. But they throw away their common sense. And I think you need some not you, but I think traders need common sense. You don't need the Harvard degree. So the common sense here is I want you to like destroy the yellow Lamborghini. That's removing your focus of achieving your destiny of greatness. That's my sales pitch to you. My next project, I might not do it for about a year. I have to finish my second degree at Harvard. once that's done, I think the next one is I'm going to teach you how to start a fund and raise money and be professional. So you have about 18 months to get your crap together so that you can go live and go on your own. Or I'll help you raise money yourself. But whatever, like maybe I sit on your board of advisors and you're in my mastermind group and I teach you how to start a hedge fund and go on road shows and raise money and have business plans and do disclosure documents and negotiate deals with attorneys and compliance people and accounting people like auditors and put it all together and you go out and raise millions of dollars and trade the way you're supposed to trade. But how am I supposed to do any of that if someone already gives you a crystal ball and you ignore it? I don't know. That's a weakness I need to focus on. I need to figure out why. Why does that happen? Yeah, that's good, Jared. That's a great flip. Here's what I'd rather do, Jared. I'd rather buy an apartment building with 300 doors on it. The bank takes probably 80% of the rent, and 12% goes to upkeep and expenses and insurance and rainy day funds for the roof or for a window that gets broken by a tenant or a flood in the laundry room. But all of that eats up 12%. And of course, I don't do any of that because part of that 12%, I think 10% of it goes to the management company. And so the management company does all the work and the renters pay the bank. And I collect 8% profit doing absolutely nothing. 8% of all the rent goes into my pocket. And after 10 years of the renters paying down the mortgage, it will increase in equity, but also most likely the asset price will go up in value too. So I'm collecting, let's say, $190,000 a year into my pocket. And then 10, 12 years later, I got a refi and the market's up. And so I sell the whole thing and make $1 million profit. Meanwhile, I collected $2 million in rent in my pocket, not in rent, but my 8% added to $2 million, and the whole thing I made $3 million. I wouldn't want to flip a house and make 50, 60,000. It's too much work. That's the problem. And that's the problem with scalping too. It's a lot of fun, guys. I love scalping. Honestly, I poo-poo it on all the time. I love scalping. You're just not going to get filthy, stinking rich. And my problem with scalping is a lot of people come to YouTube and there's a lot of people showing you how quick they can make real money, big money, and I'm driving my big cars, right? I make big money, I drive big cars, everybody knows me. It's like I'm a YouTube star, right? And I'm like, that is such a disservice to people that may actually want to trade properly and actually make big money. Well, you have to have common sense and you have to think and act and be a business person. Okay? It's logical. You need to be intelligent, and I believe you are. That's what I'm saying. So that's why I poo-poo on all the scalping and stuff. It's a disturbance and you get distracted. Okay? I want you to succeed. And you should just do the math. Like that's the thing, like bust up the spreadsheet and show me how scalping is going to make you filthy stinking rich. Actually, that was Ghetto Boys, Chris F. So I didn't write that. Okay. So you have to look up Ghetto Boys. Okay. So I hope that makes sense and I hope you believe it. I hope you believe me. That you trade Forex like a business, you have a plan, you have a vision, you have action items to carry out that vision and to achieve it. This will require a budget. This will create, like I said, action items, and you will work toward it over time. How many people think that is the way to, if you need the whole filthy, stinking rich stuff, the filthy, stinking rich way is to own a business. Okay? What kind of business do you have if you flip houses? We'll go back to, what's his face? It's sort of, who put it? Anyway, someone put that they made like 50, 60,000 on a house flip. Great. What kind of business do you own when you flip houses? You flip a house, you make 50 grand. Now what? You got to start over again. And what if you didn't make 50 grand? What if you made 5 grand or 10 grand? Whatever. It's like, what does that pay for? A week of your life? I don't know what that pays for. But, so you flip a house. Now what? Now you need another house. So you spend all this time, you find another house, and then you get it, and then you take all this risk, and you got to put a new roof in, new windows, change out the carpet, all that kind of stuff, do this and do the advertising and all that kind of stuff, and then it comes in and someone buys it, and you make 40 grand on that one. You're like, woo! Now what? Now you're out of business again because now you need another house. So now you do a search. You got to find another one. And you're competing, and you got to bid for the price, and then you get it, and then this one you think you just need new carpets. Turns out the foundation's cracked, or whatever. And it's not a business. What is a business, guys? Do you know what a business is? What is like your Forex? A scalp? No. What is a business? A business has income stream. So your trading should develop income. Not just a flip a trade. I flipped the euro dollar and made $100. Right? So what should you be doing? Well, how can you be in trades longer? How can I let my winners run? How can I get 100 open trades, all profitable? Well, you cut all your losers quickly and you let all your winners run. How can I make 10,000 pips in a month? And some of you guys like confuse like 100 pips with 1,000 pips. No, you got to trade the euro dollar from 110 to 120. That's 1,000 pips. Some of you guys, I think you think 100 pips is 1,000 pips because you're confusing the fractional pip structure of brokers these days. So your 1,000 pips is my 100 pips. But anyways, how do you build a portfolio? Okay, it's not flipping 1 or 2 houses a year. It's buying one giant apartment building with 300 apartments on the bank's money, collecting rent, paying all the expenses, but you don't even have to do that because it's all automated, and you collect whatever's left over. And the asset not only produces income for you, doing nothing, but it also appreciates in value. And at the end of the thing, you did one trade. It's one contract you signed. Income coming from renters, pays off the bank. The bank gives you leverage, so now your return on investment's huge because you put up a little bit of money. You put up 30% and the rest came from the bank. So the bank is like a silent, cheap partner that you only have to pay 5% a year, right? Like you keep the 95, they get the 5. Well, the thing is they're guaranteed their 5. You're not guaranteed the 95. But the thing is, when you dump the apartment building and make $2 million, you keep everything. The bank doesn't get that. They just get their money back. So it's like, that is a business. You own an asset that can appreciate in value, and it has an income stream. That's what your Forex trading should be. That's why I keep showing you these trades I'm holding for weeks and months and years. Remember that trade I had last year I had for a year and it cashed out? I mean, you want your asset to appreciate. That means if you buy Aussie yen, so this is Aussie yen, let's go back to the normal template, right? So, you know what, let's just change it. Let's do rainbow. Okay, I know this doesn't look bullish. I can't lose money either. Isn't that nice? Good. If this goes up, I get paid every single day in interest payments, 200% a year, plus the appreciation of the asset if it goes up as it goes up. Okay? I know I might be wrong here. I probably will be wrong here. But that's not the point. My point is I am trying. Okay. Oh, Felipe, I don't even remember what it was. Okay. But anyways, I'm trying to entice your brain to think about Forex slightly different. I want you to think about it as a business person would. What asset do I think is going to appreciate in value? And at what price am I willing to buy this asset? When can I remove the asset or remove the risk from buying the asset? How much income does this asset produce? Like, for example, you have an opportunity to buy an apartment building with 300 doors on it, and you do the analysis and the rent is so low that you can't even pay the financing costs because they're asking for too much money. Like, how do you even figure out the value of an apartment building? Well, doesn't it have something to do with the income? So, like, it's just finance, guys. It's basic first year finance, and you calculate it out, and you're like, this price is too high. This doesn't make any sense. So you go to the seller, you're like, your prices are way too high. This doesn't make sense. I couldn't even get a mortgage on this thing if I tried, just because your numbers they don't make any sense. Like, you're asking me like 50 years worth of income. Like, this just doesn't make any sense. Your price is way too high. So you pass on it. Okay. But you do the analysis and you ask yourself these questions. Should I lend Australia money? Well, due to my leverage, they'll pay me 200% a year on my actual cash. Now, of course, it's 2%, but I'm leveraged 101. 101, you know. But like, if you put up 30%, if you put up $3, do you understand your bank will put up 7 for commercial real estate? You're a minority partner. You get paid last. But if you make a good investment, you keep 100% of the upside. But you get to keep some of the income. Most of the income goes back to the bank. They put up $7. They put up $7. Of course they get paid first. You get paid last. But when do you get paid last? When you sell your asset. So if I buy low here, and at the end of the year, I sell it here, I collect that money. But every single day, as it does this, and it does this, and it does this, and it does this, and then it does this, and then it does this, and then it does this, and I get paid every day, absolutely every day. And I know with leverage, because buying with $3 down and the bank puts up 7, that means you're leveraged, right? If you were in for 50% and the bank was in for 50%, you'd have to put in 50%. You're not putting it. You're only putting in 30%. So you're very leveraged, right? Buying an apartment building. But would you buy an apartment building that doesn't pay you rent? What if you bought an apartment building and there wasn't enough rent to collect? So you knew absolutely every month out of your personal pocket, you would lose $5,000. Or if it was a bigger apartment, you'd lose $50,000 every month. Would you do it? No. Okay, that's the same as swap. Rent. Right? Rent minus, well, it's actually net operating income minus financing costs. But anyways, to clear this up, you want to buy an asset that pays you income. You don't have to, of course, but that's sweet. Your number one concern if buying an asset is that your income is high enough to pay for the rent, pay for the mortgage, right? So your rent income should pay for your mortgage, right? Plus expenses. So what if you owned a 300 apartment building, and the rent pays for the mortgage and expenses, and at the end of the month you make no money, but you own a $4.5 million asset? Would you do it? You make no money every month, but it costs you no money every month, and you own an asset worth $4.5 million. What's a big difference than losing $50,000 a month, right? So anyways, do you think about Forex trading like this, or are you just trying to flip a bunch of houses or do some drop shipping on eBay? Like, what do you think about? What is your desire? What is the vision for your business? John Taylor, the first Forex hedge fund manager. Okay? Now I've even forgotten. John Taylor, so he ran FX Concepts. And he started this in the late 70s, early 80s, Concepts. I forget now. I would have to look it up. He paid himself, I'm going to guess now, I've forgotten. Maybe some of you guys remember. I think he paid himself $250 million a year. His clients were like institutional investors and endowments and insurance companies and stuff that had foreign exchange risk in their portfolios. Okay? That's not how much his firm made. That was his salary. That wasn't bonus 1 year. He did this for like 30 years. Okay? They shut down the firm about 8 years ago. How many pips a year did they make? 0 pips. Zero pips. After paying all of his employees, after paying all the expenses of having, I don't know, he had like 300 employees or something, right? After paying all the employees and all the expenses and all the fun and games and stuff, when it was all done, he paid himself $250 million a year salary, and this is what he declared to the IRS. So you know he was stocking more away than that. That's his IRS filings. So you know he's got another 200 in the Caribbean somewhere, right? So anyways, that's what he paid himself for decades as a currency trader, and he made no pips. Well, that is the value of the swap. So that's owning an apartment building and collecting the rent and never selling. Okay? That's all swap. Again, this is food for thought. I want you to think of, you lend money. You loan money. My name is Wayne, and I loan foreign governments, or how about this? Sovereigns. Ooh, that sounds so good. I loan sovereigns money. I'm like a bank for countries. But not, right? But I charge loan shark rates. Whatever. But you loan money. So you say, okay, I'm going to arrange for Australia to get a loan. And so you go out to as a banker now. So you're a banker. This is what bankers do, by the way. So Australia comes to you and say, Wayne, can you help me find some money? And you're like, yeah, cool. I'll make some phone calls. And you call Japan. You're like, hey, Japan, I want to borrow a boatload of money. And they're like, that's cool. We're going to charge you negative 0.1%. Right? Let's just make this easy. They're like, that's cool, Wayne. We'll give you the money for free. So I lost my pen. Okay, so we're going to give you the money for free. Cool. And then you call up Australia and like, hey, Australia, that's cool. I got your money. I'm going to charge you 1.5%. Well, the thing is, Japan says, well, for every $1 million we loan you for free, we still need to make sure our investment has collateral. So I want you to put up 10,000 bucks. Okay. So now you're charging Australia 1.5%, but you're getting the asset for free. You're lending them money. Okay. But you're a banker. This is how banks make money, by the way. Some people have extra capital. They want to deploy it. And some people need capital. So Australia says, hey man, we need some capital. Sure, 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 sure. I'll make a phone call. Then you call Japan. Yeah, I need 1M. What's the rate today? Oh, 0%. And what collateral do you need? Oh, you need 10K collateral? Sure, I'll send over the collateral right now. Send over the mill. So they send over the mill. You call Australia, you're like, okay, you're going to have to pay me 1.5% on the million. And they're like, that sounds really good. So now you take that asset that you just leveraged up from Japan and you give it to Australia. They pay you 1.5% on your million, but you only ponied up $10,000. So you're making 150% a year. How'd you like to do that for a living? What if you explained it this way to your friends and family? They think you're a degenerate gambler. Then you explain it that way. And no, my name is Wayne McDonald. I am a global financier. And I lend money to sovereigns. Which is a fancy way of saying countries, governments. What do you think of that, guys? Yeah, Carlito says local banks do that with your money. Of course they do. But I'm trying to open up some minds here where some people want to flip some quick, easy scalping money, and they believe they're going to become filthy, stinking rich that way, and yet no one ever does. So I'm trying to say, wait, whoa. Let's look at it from an intelligent point of view as a business person. I would rather you be a global financier that lends sovereign money. Now, if you could do that and explain it to somebody, or let's say Japan charges you 1%, and you loan the same money now, but you have to convert it, but you loan it to Australia for 1.5%. Your carry is only 0.5, but you only have 10% of the money down, or actually even less than that. You have 1% of the money down, so when you add a couple of zeros, you're making 50% a year. And you're like, yeah, Australia is going to pay me. So I'm going to make 50% a year loaning money to Australia. That's how I want you to think. Now, explain to your mom how if you can do this for the next 20 or 30 years, you might get filthy, stinking rich. But I tell you what, your mom is smart. Women are smart, by the way. The best traders in this room are likely female. They're smart. They're risk averse. They have a vision for the future. And I think it has to do with the vulnerability of being pregnant and giving birth and raising children for 35 years now. Remember how you used to raise them till they're 12 and marry them off? Now they're 35 years old and living in your basement, right? But the thing is, there's a real risk and vulnerability to that. So you have to be smart and you have to be realistic. Like moms are on their phone all the time, going to kids' things. We got to get the kids, and then tomorrow we got this and this, this and this and this. You can see moms all the time managing their children, and dads are like, "Ooh, I've had a tough day at the job. I think I'll have a whiskey and relax today." I'm like, relax. We got to buy shoes for our kids. We're going to there. We got the right. So, anyways, women are way more in tune to reality, and men are dreamers. Like, yeah, I feel like leaving the village today and going hunting moose. But it's hard work and dangerous, so maybe I'll do that tomorrow. Now, so explain to your mom, you flip currencies. You're in them for 20, 30 minutes at a time. You don't have a strategy. You don't understand fundamentals. You have no bias. You log into your charts and you look for a trade. And from this, you're going to be so consistent that you're going to make lots and lots of money. And then once you learn how to be so consistent, the secret to success now is jacking up leverage and putting your, huge lot sizes on your tiny little account. But you're very, very quickly going to turn your $5,000 account to $50,000 to $500,000 to $5 million. And your mom's going to look at this and say, son, you're delusional. absolutely delusional, son. Why don't you get a job? Work your butt off every single day, earn an income, and save as much money as you possibly can for retirement. And what does your mom know that you don't know? Compound interest. If you start doing that when you're 30, by the time you're 70, you'll have money to retire on. You can stop working. But then you're like, Mom, I refute that. I don't want to wait till I'm 70. Okay, good. Start a business. Stop gambling. Start a business. You know, most millionaires own things like oil change shops. I met a guy, he's got, I don't know, 20 million? And he has aluminum, he puts aluminum roofs on like commercial structures. These are the millionaires, right? I know a guy that spends something like $3 million a year on his jet. You know what he made his money on? Just his jet cost him $3 million. And they fly from here to the Caribbean to be on his yacht, which costs another $3 million. I'm guessing, but you know, it's a big yacht and it's a nice plane. And I don't mean like he charters a plane or he has fractional. That's his frickin' plane. So he's dropping 5 to 10 million a year on his toys. He's an old man now, right? How did he make his money? Trucking. He takes boxes from a warehouse on the outskirts of Atlanta, drives it to the airport, then picks up freight from the airport, drives it back to the warehouse, then picks up, right, then unloads that, and then they put freight back into that, and he goes back to the airport. Then he drops that up, picks up new freight, and takes it back to the warehouse. And he does this every day. Of course, he added a truck, then he added a second truck, then he added 50 trucks, then he added 100 trucks, and he has 300 trucks, and then he sells the business. And now he spends his life flying around in his private jet to go on his private yacht in the Caribbean. He owned a business, not a degenerate gambler. And it only took him 25 to 30 years. That's intelligence, that's logical, and you know I'm right. So this is what your Forex trading is going to be like. You're going to get really good at what you do, think about it as a business, and as you make money, you're going to reinvest in your business, reinvest into your business, reinvest in your business. Slowly grow your account size because you know your product and your service is money. And the amount you take out is a killer. The amount inside your trading account is your business. Because now you can go to, let's say, in 20 years from now, guys, you're still collecting the yield differential, right, of 0.5%. But now you're not borrowing 10 million, or you're not putting up 10,000 in cash. You're putting up 100,000 in cash on a trade. Okay? Same trade. It's the same trade. See, the beauty of this business is it's absolutely unlimited upside. You grow your trade, like, what happens to this trucker if he goes from 300 trucks to 3,000 trucks? Is it plausible there isn't enough business for him? That they don't have enough customers? They're like, dude, 3,000 trucks? We don't have that capacity. You need more customers. You need to grow your business by 10 times. But what if a big rich uncle of yours sees what you've been doing for the last 10 years and says, you know what? You're really impressive. I really like what you've been doing. And I can see you have a long-term vision, that you're a hard worker and you're disciplined. And having looked at your results, you're really impressive. So why don't you take me on as a client? By the way, right? That happens all the time. Once you're successful, clients start just falling out of the sky because everyone's looking for the same thing. Consistency, low risk. Okay? So anyway, so he 10X's you. So now you go to Australia and, hey, Australia, how much would you like to borrow? And they're like, as much as you can give us. So you go back to to Japan. You're like, how much will you give me? Let's all put this in U.S. dollar terms. If with my $100,000 down, how much will you give me? $10 million worth of Japanese yen. $10 million worth of Japanese yen. So 1 billion. 1 billion yen. So now and then you convert your 1 billion yen to Australian dollars and you loan it to Australia. Now you're still, they're only paying you 1.5. Let's say Japan is charging you 1. Remember, this was 1. So you're still only collecting 0.5, but with leverage 50% a year. Now on your 100,000. Okay, on that one trade, instead of earning 5,000, you're earning 50,000, and this is on a $100,000 investment. But you know, right now, even in these pathetic times, we're not talking. Some of these trades are paying me 1,000% a year, or 500% a year. This one's paying me like 200% a year, guys. So your 100,000 in 1 year will be 300,000. That's how you get filthy, stinking rich. Nothing's changed. This market gives you unlimited business. You're in the business of loaning money. There's unlimited business. There's more customers you can possibly handle. It's like starting a lemonade stand at the end of your driveway, and all of a sudden you look out, and there's 10 million people in line with money. And you're like, oh snap, I don't have enough lemonade. I don't have enough cups. I'm going to need more tables. That's the business opportunity you have here. Except you're not selling lemonade, you're selling money. Who would like more money? Everybody wants more money. That's what you do. You're a global financier and you loan sovereigns money. And you make the money on the spread. But here's the cool thing. That's only if you collect interest. That's if this stayed sideways for 1 year. Now, if it drops lower, you're out and you don't lose any money and you had the opportunity to make money. It was cool. So you'll try again. But if this goes up, so this one's paying 200% a year. 200% a year. But if it goes up, I'll probably make, if I'm long this for 6 months, I'll probably make 2,000% in asset appreciation. That's like the value of your apartment building going up in value over time. How many people think if they held an apartment building that's paying rent, and they held you owned it for 10 years, in 10 years, it'll be worth more than you paid for it? How many people think that's generally true? You buy an apartment building, it makes money, it's profitable. Rent comes in, you pay expenses, there's money left over. And in 10 years, it's going to be worth more than you paid for it. How many people think that that's realistically assumable? That's asset appreciation. You own the asset. So I would expect on this trade you'd make 2,000% in asset appreciation and only 200% in income. That's rent minus expenses minus financing costs. Okay. Joel says it's impossible. So I don't know where you live, Joel, and maybe where you are, that's true. Benjamin says you don't know the market. So no, but you have to have general assumptions. Look, if you don't think the real estate market's going up, you're not going to be in the real estate business. Okay. But like right now, the Fed has spent the last 10 years pushing real estate prices up. Okay. When I bought this house, it was during the worst part of the financial crisis. Nobody had money. But a year before that, I went to the bank, and I liked this house because it was on a lake and very strategic, and it's actually on a peninsula, so I see lake there, I see lake there, and it's just gorgeous, right? So I wanted this house. So I went up to them and I offered 50% less than what it was originally in the market for. Actually, a little bit less than that. I offered 40% of the original asking price. They told me to go to hell. So I waited a year. I came back and I offered significantly less. And they said yes. Okay? But you had to have money. I had plenty of money. So I had to have money. So I owned, right? So anyway, so I bought the house. It was really good. Then, and here's what I knew. The Fed started putting together policies that guaranteed me that real estate prices would go up. It's called quantitative easing. It's the whole purpose of quantitative easing, to push up asset prices. The stock market and the real estate market. And they actually talked about it. The stock market, right? And real estate. Asset prices. Boom. Free money. Free money. Plus I get to live in the house and be on a nice lake. I go kayaking with my children. I can just tiptoe into the lake and go kayaking in my lake. This is so nice. The bank paid me to do it. The Fed paid me to do it. That's filthy, stinking rich. And that's where we're going. I want you to think logically, intelligently. And the cool thing is almost nobody knows this common sense. But I know you understand it. That's what makes it common sense. You understand it. But now someone's going to teach you. Me. I'm going to teach you how to trade everything. Everything's a trade. Forex, the stock market, commodities, real estate. It's just money. It's only money. That's it. It's only money. And it's all, who influences money? The central bank. And who makes money? Owners. If you scalp, you have a job, you're poor. If you get paid for your time, you're poor. You got to own a business. You got to own a real estate, if you own an apartment building with 300 apartments, and after paying all your expenses and paying all the mortgage costs and all the financing and the management company, you do absolutely nothing except own a piece of paper. You own it. Hello. And everybody does everything else for you, and you make $200,000 a year, you're rich. You're wealthy. You don't get paid to mow the lawn. You don't get paid to wake up and put on a suit and tie. You don't get paid to go to your apartment building and wash the windows. You don't get paid to fix the broken toilet. You don't do jack. You own a piece of paper. And it's not even paper now. It's all digital. People just send you the $200,000 every year. And then when you're done, you're like, yeah, I'm really bored of this. I don't like making $200,000. I got to get out of this thing. So you sell it and you make $2 million and you're like, damn, that was a hard 10 years. You signed a piece of paper that the lawyer gave you. And now you collect $200,000 a year. You do that for 10 years. So now you have $2 million. And then you sell it, make another $2 million. And you're like, yeah, I made $4 million. I didn't do jack. Nothing. Didn't think about it, didn't do anything. That's where you want to be. Okay? That's because you owned something and it had income and appreciation. Forex is just the same. You are a global financier and you loan sovereigns money. You collect appreciation and you collect income. And if you can build a portfolio around your fundamental global bias, you will get filthy, stinking rich in less than 25 years. That's my sales pitch for you. Filthy, stinking rich, doing hardly any work in less than 25 years. And people are like, no, Wayne, I need to get rich like now, like this week. Someone actually told me that. They're like, Wayne, I want to buy your training course. I really need this because, I got this big situation and I need to make money. And I'm like, don't do it. Like, what do you mean? Don't take the course. Don't even do the trade. Just don't do it. And they're like, no. I got all these problems and this, that, and the other thing, and it's all for the family. I'm like, don't do it. Don't open the account. Don't trade. Don't buy my course. Don't do it. I swear to God. Because you're going to lose. You're going to fail. You're just going to fail. I can tell already. Failure. But if I say you can do it in less than 25 years and you don't need to be a brain surgeon, you don't need to go to Harvard, but you will have to think intelligently and use common sense and then have a work ethic and a discipline to carry out the strategy so you can get in the trades based on your logic and common sense. If you can do that, you got it, man. And I hope you're on my team. I hope you're on my team. And I hope you do meetups around the world. We meet on exotic beaches or fabulous vineyards and in major cities around the world, and we have an opportunity once a year to, I don't know, have a cocktail and a cigar and laugh at how amazing your life has become. That's my goal. I actually used to do it. It's the major reason I do all this stuff. I've actually gotten together with a group of boot campers in my penthouse suite that was large enough to have a movie theater in it. And all these boot campers got together, and I said, all right, now that we're all together, I want to have an opportunity where everyone just briefly introduces themselves, introduces their HotCom name, and why you joined FX Bootcamp. We'll do really quickly, right? That took 2 hours. People were crying because how much their life had changed. And I'm not talking about 2 people. I'm talking like 60 people. And that's why I do this. So where's your success story next year? Let's meet up in Singapore and let's have a drink and a cigar and let's laugh and maybe cry and talk about how amazing everything has become. Will you do that for me? So sorry for the rant. Yeah, it's way too late. I got to get ready. I gotta meet with my swing trading group in very soon. In fact, oh man, I got to get going and go on to the next thing. One and done and on to the next one. Huh? So if you want to join my swing trading group, I know it sounds like a sales pitch, like all this led up to a sales pitch. It's not, trust me. I'm about to start the swing trading group, week number 2 now. We're going to set up trades 100 to 300 to 3,000 pips if possible. We're about to go do that. So if you want to join me, swing.fxbootcamp.com. And yeah, there you go. HTTP swing. So this is what we're doing. Whether you join us or not, this is what we're off to do. You're welcome to join. I used to make you buy $1,000 course first and then get invited, but I'm going to redo the whole course and I'm going to do it live with our group. So I'm like, well, then I should just, everyone that joins should just get the course. So now the course is included. So it's great. It's like 80% cheaper than it was a year ago. So you're in or you're out. So anyways, peace on earth. May the pips be with you. May your profits be above average. Thank you, Traders Way, for making this possible. Thank you to Forex.Today for hosting us. Thank you for YouTube to only dropping us 4 or 5 times today. Not bad. So I will, if I don't see you in 45 minutes at the swing trading group, then I will see you Monday here at Forex.Today. So peace on earth. May the pips be with you. Oh, Johannesburg in the house. Right? Oh, Abu Dhabi in the house. Anyways, peace on earth. May the pips be with you. May your profits be above average. And I will see you on Monday. And if you want to spend the whole weekend watching other videos, make sure you subscribe or watch this one here on how to trade the Mexican peso and why it works. Cheers.